So can you defer your student loans for basically like forever? If you know the rules that I'm going to show you, you might think that the answer is yes. So we're going to go over 6 different kinds of deferment for student loans, and we're going to talk about how long you could use each to put off your payments. And we're going to talk about why, if you really understood these rules, maybe you would never want to make the payment again. I don't know. Some of these things, when you defer your student loans, are things that you really hope doesn't happen to you. Some of them are just things that happen in life generally. If you're doing certain occupations, some of it is, temporary kind of things that might happen to people, like losing a job. So we're going to cover all the 6 different kinds of deferment and kind of contrast that too with forbearance, which is another term and another thing that people use to avoid having to pay their student loans. So let's talk about the first kind. So the first kind of deferment is in-school deferment. This is by far the most common. And usually when people talk about deferring their student loans, they talk about it, because they're a student. And you're doing this in-school deferment, which is an automatic deferment, and you get it when you're at least enrolled half-time. And this is obviously pretty helpful, because if you're a student, you had to make student loan payments, that'd be pretty tough, right? Now, that wasn't looking into things like income-driven repayment. Honestly, with income-driven repayment options, it's kind of irrelevant, because if you're a student making nothing, your payment would be nothing if you did have to make payments. But at least you're not required to make payments, right? You can just focus on being a student. So how long can you use in-school deferment for? The answer to that is basically unlimited. I mean, if you're a student for forever, you can use it for forever. But you basically have to be enrolled half-time, so you get it for that length of period. And then also you get it for 6 months after graduation. That's called a grace period, basically. So that's the first kind, and it's by far the most common. So let's look at the second kind, which is unemployment deferment. So unemployment deferment is different because you would only get this if you applied for it. And when you're going to apply for it, you're basically going to get approved for up to 6 months. And you have to reapply every 6 months. And you get a total of 3 years worth of unemployment deferment. So if you lose your job, you can call your servicer, say you're unemployed, basically prove it to them by signing something or submitting some sort of application, and then you'll get approved for unemployment deferment. That's the second kind. Now the third kind is economic hardship deferment. This is a little different. And economic hardship deferment, honestly, I'm going to be real, okay? I think I know a lot about student loans until, I find something new every day. I mean, it's just really unreal, right? I thought that economic hardship deferment was basically the same thing as hardship forbearance, and it's not. So deferment in general means you're basically, putting off having to make payments on your student loans, but any kind of subsidized loans that you have are not going to be accruing interest during a deferment, whereas during a forbearance, they probably would be. So that's why deferment is generally preferable to forbearance. All right, and forbearance, the loan servicers have a lot more discretion over, whereas deferment is something that's pretty set in stone. It's clear in the rules as to what's expected. So economic hardship deferment, you would be eligible for that if your income was below 150% of the poverty line for your family size. So basically, you can go look up on the basically Department of Health site. If you just type in federal poverty guidelines, and it'll show you what it is for your family size. Just multiply that number for your family size by 1.5, and if your income's below that, you would qualify for an economic hardship deferment. So why not just do that forever if your income's low, you might ask? It's because you only can do it for a maximum of 12 months, and then that's at a time, and then it's a total of up to 3 years. So you can't do it forever, you can only do it for a limited amount of time. Number 4 is the military deferment. So this is you get called up, you have to go serve overseas, you have student loans, you're in the military, your student loans are put into a deferment until you get back, and you actually can use it for up to 13 months after having to serve in the military for certain situations. So a lot of times this deferment is something that just kind of happens. I've even had some clients that have had a military deferment happen to them when they didn't want a military deferment. I mean, certainly, if you're trying to pursue something like public service loan forgiveness and you get put into deferment, that's awful. That's terrible. You're serving our country and you could get loan forgiveness in 10 years, but your loan servicer is just taking it upon themselves to relieve you of having to make payments and taking away potentially years of credit from you. So that's really unfortunate, but it is something that if you really, really had to put your loans into deferment, let's say that you don't have maybe enough loans to really justify going for a big loan forgiveness program, then that might be, a reason for, for using that one. But really, it's just kind of unreal that you have something like military deferment and public service loan forgiveness. It just shows you how ridiculous our loan program is that those two would coexist. Now, number 5 is a new kind of deferment called cancer deferment, and this is the one obviously I hope none of you actually have to use. But if you are ever having to go through treatment for cancer, you're allowed to put in an application with your loan servicer and pause your payments, and also you get an additional 6 months after that. So that's really helpful if you're really struggling with your bills, trying to figure out how to, not only keep your job, but just make it through cancer treatment and beat cancer. So, really, hopefully you don't have to use that one, but if you do ever, heaven forbid, have to go through that, then at least you have option 5, cancer deferment, to pause your student loan payments so you can focus on more important things in life, frankly. Number 6, and the last kind, is the catch-all other kinds of deferment category. So I'll give you examples. This doesn't really apply to most people, but for example, if you were doing a approved fellowship program, say you were going to, for example, a lot of medical folks go through fellowship programs for post-residency training, or there's also dental folks that will be involved in various residency type programs. There are a lot of really random graduate fellowship programs, and you can get them approved for a deferment during that period where technically you're not a student, you might be making an income, but it might not just be a very large income compared to what you will make in the future. Another kind is there's actually a deferment specifically for people who are disabled but in a rehab program to get them back to work. And then there's also a deferment period for people that are working towards Perkins loan cancellation. So those are 6 different kinds of deferment. And if that's not enough, you can also do something called forbearance, which you can use 1 year at a time, up to 3 years total, to put off your payments with that too. And deferment, like we said, is preferable to forbearance, but both will stop your payments. And then what's really nuts about this is the loan servicers will hand out forbearance like candy. Basically, their cure for everything is a forbearance because they don't have to go through a bunch of applications, which, as you can tell, some of these deferments actually require documentation. And what's even better is to not even have to do that. They just want to put you in the forbearance because it's a quick phone call and they're done, right? So you are allowed to utilize both of them at different times. So if you do think you qualify for one of these deferments, just force your loan servicer to accept that deferment request rather than a forbearance request, because they want to get off the phone as fast as possible, right? And so that means that they're not going to want to give you information about all the different loan programs that you could be eligible for, and deferment is a really helpful thing for people in some situations. So the other thing to note is, remember I said at the beginning of this video that you could put your student loan payments off basically forever if you knew these rules. So if you have a bunch of federal student loans and you consolidate them, what happens? It's a new loan. And because it's a new loan, all of the aforementioned limits on how long you can put off payments that I mentioned are all reset and all start all over again. So that is nuts. That means you could put your loan payments off for years and years and years, and we can tell with the number of people who owe 6 figures in America and how fast that number is increasing, that problem is becoming worse and worse and worse. So those are the different kinds of deferment and forbearance. If you have any questions about the differences, or you have a story to share about what your loan servicer told you, leave it in the comments below. We'll take a look and see if we can get to the bottom of what's going on in your situation. Thanks. I'm Travis from Student Loan Planner.